What up, what up, what up? It's Cuff from the Vision Lab podcast. Yo, we're super excited. Another episode of Behind the Dollar. Hey, listen, do you know somebody that's in a financial mess, can't get ahead, no retirement plan? They're tired of the rat race and really looking for a brand new start. Folks, we get it, man. There's a ton of content and media suggesting that, you can come out and attain wealth, and it's really simple. All you have to do is have these strategies and be consistent. But all that being said, only about 5% of Americans that were born are ever financially successful or wealthy by the age of 65. In today's episode, our guest is absolutely amazing. She's going to uncover different techniques to help each one of us become more financially fit in 2021 and beyond. Yo, it's time to get behind the dollar. P, what we got going today? Who we have on the show?
Cuff, today's guest is a native of the Dominican Republic. She is an award-winning money expert. She is the instructor for the investing workshop. She is known as the J-Lo of personal finance. Please welcome Jully Alma Tavares to Behind the Dollar.
Yay! Thank you. Hi, everyone. So nice to be here. Thank you guys for having me. I'm excited to talk about money. Let's do it.
Let's do it. Before we get started, though, I want to give a big shout out to Aquila Financial and Tax Services. Shout out to our man, James Aquila. Thank you so much, sir, for carving out some time. I know it's tax season, so it's a very, very busy time. And I'm glad you jumped into the lab with us, man.
And I'm glad to be here with you guys. Really, this is going to be an exciting night.
Absolutely, absolutely. So let's talk money. So let's start here, Jully. What is Investing Latina all about?
Yes. So Investing Latina is all about how I really started to share my story. I started investing when I was 19 years old. I had no idea what I was doing, but I started, and I did it because I had access to a company sponsored account, which is it was at the time a 403B. And they told me, listen, if you put some money in, the company is going to match you, and they're also going to put money in. So to me, that sounded like free money. And I'm like, yeah, I like that idea. That sounds great. Sign me up. And so I started, and I really didn't have a strategy, a vision. I was 19 years old. So thinking about retirement was probably the last thing that I was doing. But I did it because it sounded like it was a sweet deal. And what I later on learned, that it was the best decision that I could have made for my financial future by starting very young and just being consistent with building that up. But what I also learned is that when you do start that young, is that you don't have a strategy at all. You're just like, oh, okay, let me just put money in. And you take a lot of risks. And sometimes that means also experiencing losses. So we'll definitely kind of talk about those things a little later on. But essentially with Investing Latina, I wanted to share that message and let people know that, you can start. It's never too late to start. And I lead the investing workshop so that people across all ages can literally just dig in and start to get to know what exactly is the stock market, and how is it possible that I can possibly make money? How can I get to $1 million portfolio? Is that even doable? And so I break it down so that people can see that if they do certain things, it is doable, and that it can be easy if you want it to be. It can be very hands-off, because truly investing in the stock market is probably the laziest way to become rich. It is, because you don't have a lot that you need to do. You can just kind of automate it and have it do its thing. And just because of the nature of our capitalist world, it's going to grow over time, because there is innovation and there's productivity and new companies come up with things. So it just literally grows as the time goes by. And it's been a pleasure to do it. Now I write for Time Magazine's Next Advisor. I've spoken at Google, at NASDAQ, other Fortune 500 companies. And I really am focused on teaching the women, teaching the Latinas, teaching people of color that have always been excluded from these conversations, to insert themselves into this conversation and to participate. Because when we think about the stock market, it doesn't care what you look like. It doesn't care what you do for a living. It doesn't look into where your family's from or what you do. All it cares is that you're putting money in so that it could do what it has to do. So that's my mission.
Absolutely love it. I love it. So you got started around 19 with an employee stock plan, probably a 401k, right?
Yeah.
Can you talk about the discipline that you have to grow a portfolio?
hmm For sure. When it comes to discipline, I think that when we start off, we really don't. I mean, everybody has a different upbringing. Sometimes people have very strict parents that really force them into a very disciplined environment, and they end up being very hard on themselves and very stressed, and they set really high expectations for themselves, and they live life in that way where they're extremely disciplined. And that is, it could be a good thing, but it can also be a negative thing. It can impact people in different ways, mentally, physically, where you put yourself under such duress that don't really aren't really great at managing other emotions. But what is good about having discipline or developing discipline as time goes by is that you really start to stick to your guns on things, and you really start to dig deeper into the things that you are interested in. And I think that that's what happens when you start investing into the stock market, when you start investing into real estate and investing into any business that you put your mind to. You just dig deeper and you become more disciplined, because if you really enjoy it, it's because there's passion there. And that passion, I think, helps people become more disciplined.
Absolutely. And here's one of the things that a lot of younger being not as savvy with investing, right? One of the biggest mistakes that they can do is take their money out because they're in
Yeah.
some type of hardship, right? I'm a little behind on bills, or maybe some medical expenses came up, or what have you, and you deplete that account, or your portfolio. What are the dangers, or can you speak to the dangers of actually liquidating your portfolios when in a financial hardship?
Yeah, absolutely. When it comes to liquidating your securities, because I do like to explain to people that when you are trading your dollars in the market for stocks or funds or commodities, it's you buying a security, it's you establishing your wealth in a different way. So you are trading the cash that you had in your account for a sort of IOU. Like, this is what you have. This is the security that's holding on to value and appreciating in value. It's increasing because of what the market naturally does. And eventually, when you're ready, when it's time, you get to sell that security back in the stock market and somebody else buys it, right? And you cash out, you get your money, right? So what you have to really consider before you do that is timing, need, tax repercussions, and any fees that could be associated with that. So when you start investing, you really have to start by deciding what type of account you're going to use. And there are accounts that are restrictive, and then there are accounts that have a lot of flexibility. And the more flexible it is, the more you got to pay. And you you pay more for that flexibility. So when it comes to retirement accounts like 401ks and IRAs, they're restricted. They tell you it's designed for you to buy securities, buy these things that are going to appreciate in value over time until you're ready to retire. So if you take it out before that time, we're going to charge you for it because that's not what it was designed to do, right? So that's one way that you kind of build wealth through those accounts, through that sort of IRA protected or 401k protected accounts. If you want flexibility, you can still buy those type of securities. You can still buy stocks and funds, but it's best to do it through a brokerage account. That brokerage is not going to give you any time restrictions. It doesn't say, all right, you could only buy and you only can sell after you're ready to retire or at this certain age. But what it also means is that you have to pay taxes in a double way. So you pay taxes the year that you earn the money that you put into that account. You pay taxes the year that you take that money out. And if you have earnings, if you profit within that time frame, you're also paying taxes. So a lot of people don't like to hear this, and probably Akila is like, yeah, you need to know that taxes, if you think about investment, like you have to think about taxes. You have to think about, what is my strategy? What are the implications if I convert an account, one tax protected account to a different type of account? All those things come into play. So a lot of times people don't want to hear the word taxes, but I'm like, you gotta dig into it. You have to get at least a little bit familiar enough to be able to make smart investment decisions, right? So if you're gonna be stop buying and selling stocks in a short amount of time frame because you think that you can time the market and you can make quick money, you might get lucky, it might happen, you might be able to acquire enough sort of skill to be able to make a little bit of money, but you also would be liable for short-term capital gain tax on what you've earned. So those are things that you have to think about before you take money out. Whenever you take money out, think, damn, who do I got to pay by taking this money out? And then it's not just paying yourself. That's what you got to know. You got to definitely pay the IRS, and you definitely have to pay fees if it's a tax protected account for breaking the law when it comes to that particular account.
It's funny, right? Like, so this is thank you for copping on, but this is why we do the show. And Cuff and I are familiar with some of the terms and things like that you're using. But from your standpoint, from where you sit in the room and on this topic, right? Why are so many of us as Americans, why are we so financially uninformed?
Yes, I think it has a lot to do with society and business and greed. It has a lot to do with those things. I think that we are constantly being exposed to advertisement from a young age, even now, if like, I think of back then when we had, when we used to actually sit down and watch TV. Now we stream everything. But when we used to sit down and watch TV, every couple of minutes, there were ads on TV, and they created these ideas and these visions for us to kind of try to be that new cars, right? A new home, and buy this, it's going to solve all of your problems. And that's business. That's business, right? That's how business function. They want to advertise so that you buy. And we're conditioned to absorb all of that and buy and buy and continue to buy. And there isn't as much conditioning about reserving your money or starting to build wealth, investing your money. There aren't a lot of ads like that, right? You don't turn on the TV and it says, oh, open up an IRA because you can slowly build wealth and become a millionaire. And then you can pass it down to your children. And that's something that in our communities of color, we suffer a lot from. We suffer from that because we don't get to the place where we pass down wealth. So I think that it has a lot to do with our education. It has a lot to do with advertising. In school, it's not a huge priority to teach personal finance. Like sometimes economics is taught and it's kind of thrown in like an econ class in high school, and not all states require econ classes. But sometimes they do, and sometimes personal finance is thrown in there. And I think that that's wrong. I think that it should be more in the forefront. It should be very important, because what it does, if we don't learn about personal finances, we go out into the workforce, we start earning money, our lifestyle begins to increase, we start spending more, and then ultimately we become in debt, we become depressed, we have to continue to buy to feel better. And it's a cycle that unfortunately most people, or a lot of people, really continue to live by.
I think it's like creating supply and demand, right? It's creating supply and demand because the more people that we can have in a society that is relying on the companies to provide the 401ks or the investment that we need, the more they're gonna be there, right? So if there's no supply, there can't be no demand. So I think that's what really is. You tapped on it really good, and that's where we are as a society.
I'm curious, Julie, do you still feel like as a country we have this like financial blind spot? Like, I think the cat's out of the bag now on a lot of levels in regards to, what quote unquote rich people are doing versus us, everyday 9-to-5ers and the true laborers of the workforce. Do you feel like we still have that blind spot of the country, or is it now as a matter of how do we as the the general laborer, those who are not owners of businesses, is it more of like, how do we figure out how to get at the table now?
hmm I do think that it's still a blind spot in many, many ways. I think that, especially with the year that we had last year, people were just trying to survive. It was rough. So millions of people lost their jobs. Millions of people had to get on unemployment, and that affects people in so many different ways, not only financially, but mentally. You start to kind of question, what's my purpose in life? I got let go of this job that I dedicated so much to. And I think that with people just trying to survive last year, it kind of set many people back. And we saw like rich people became billionaires. We had more billionaires, more millionaires become billionaires last year than in history ever before. So it's very interesting how split our world is. And this isn't exclusive to the US. This is across the world. There's the people that make a lot of money, the people that benefit from corporations, from building businesses, multi-level businesses. And then there's people that actually are at the bottom working, and the ones that have to shed the sweat and blood, sweat, and tears to make those things happen. So I do think that there still continues to be a blind spot. When you're surviving, you're not thinking about opportunity. You're not thinking about where can I make more money. That it becomes difficult. Like you can, and I'm from New York. I have a hustler spirit. I could be at the very bottom and still be like, all right, how am I going to do the next thing? How am I going to work on my next project and rise up? But at the end of the day, that's actually pretty hard for a lot of people, for most people. Think about middle of America. They don't have the opportunities that we have in cities. They don't have that sort of exposure. They don't have that sort of those same opportunities. So it becomes very, very split in terms of where you are financially and how much money you can bring in. And also it does come down to the person. Like if you're gonna get it, you're gonna get it no matter what, right? If you have mental roadblocks, which I know y'all talk a lot about how important it is to really break through and level up. But if you don't have that, life can be very, very challenging. So I think we still have more to do. And I think it's so important that y'all have this, because inspiring people is a hard job. It's hard to inspire people, to get them motivated to build wealth, to get them motivated to go out and get it. It's not an easy job. So I appreciate what y'all are doing, and that y'all have me up here, because it's what I also like to do. I like to make sure that people feel empowered to go out and get it, to explore, to innovate and do what they got to do to build wealth, not only for themselves, but also for their families, right? Like who doesn't want to take care of their families and be good?
Right. And you know what? First of all, shout out to the NYC. I started to rock my Yankee hat for you since you're going to be on the show, but and we appreciate everything that you're doing, right? And it's one of the main reasons why I wanted to have you on the show, because you live, breathe, and eat this stuff, right? We talked about 2020 being a really tough year for a lot of people, and I've said this on numerous shows on our regular podcast, airing every Tuesday at 11:30 Central Standard Time. Shameless plug. But
Love it.
you know, there were people that really suffered in 2020, and then like you said before, there were the most billionaires ever made was in last year. So there's a huge disparity between the two financial worlds, right? But I want to call it back. So it's February 2021. We you may have gone through some stuff last year. In terms of building up or rebuilding, right? What are some of the core principles that you, Jully, try to not only live by yourself as an individual, but what you try to impart upon your audience and those that follow you?
hmm I think that when you are in the position of rebuilding, and I really honestly love that word, because I think that we should be doing that all the time. I think that we're constantly getting knocked off of our feet. Like it happened last year in the craziest of ways. We're like, what the hell? We were not expecting that. Everybody's in lockdown. We have to change our lifestyles. Like I'm the type of person that like to really enjoyed being out, being social, so and travel and do these all I like to be out, and it really changed the pandemic changed everything for us. So it was a sense of having to stay quiet, kind of reflect. And I think that that's what rebuilding requires. Rebuilding anything requires you to take time to have your mind be silent, and for you to have moments where you can just let ideas flow. You can kind of think strategically, and in order to do that really well, you have to definitely be well rested. I think that that's something that we have lost this year. I think it's been all over the place. People working from home now, they're working 24 hours, whatever it is. They're overworking now. They're doing a lot of different things, and the anxiety has caused us to kind of lose some sleep. But I think that what I like to tell people when it comes to rebuilding, and I talk about rebuilding credit on my platform, because we mess up sometimes. That's the reality of things. Like we have debt, we have student loans. Student loans are like killing our generation right now. So it's something that we just have to kind of get through. But you go to the drawing board. You just assess what you do have going on. These are the accounts that I have. This is my positive. These are my negatives, my liabilities. And then this is my opportunity. This is where I can build, and this is how I can invest so that I can really get myself out of it. Because I think that that's something that's really important. A lot of times people won't invest until they're debt free or don't have any other liabilities. And for me personally, I think that's a really huge mistake. And I think it's something that's shared by a lot of big figures that is not positive. It doesn't work for people of color specifically, because we're always in the position where we have to work harder, where we have to do more, where we have to constantly prove ourselves. And that's not the case for white people, that they a lot of times get written in, and they're like, yeah, sure, you got the job. This is what it is. It's cool. You can do it. Whereas people of color, it's not that. It's like, no, wait, what are your degrees? What are your credentials? What you got to, there's always this questioning, and that means that we have to work harder. So instead of that being said, rather, and knowing that we have to work harder, we have to constantly push ourselves to work smarter. And we have to know that maybe we're not going to get it on the front end. Maybe we're not going to get these opportunities. Maybe stuff is not going to be given to us on a golden platter like other communities can have it. So we have to be more creative, and we have to think of other ways to get it. And I think that investing in the stock market in a responsible way, I'm not talking about like gambling your money in the market and being, putting all your chips into one specific stock and doing stuff like that, because that's very high risk, and that can be also detrimental. It could set you back. So you have to be cautious. But if you do things the right way, if you are committed to it and you slowly learn as you go, you're going to position yourself where you're working smarter, and you don't have to work as hard for that dividend that's coming in, that additional stream of income that you got going on. So I think that that's what's important for us.
So it's interesting that we talk about certain privileges that other communities have, because my next question to you was really along that line of Susie Orman or Dave Ramsey, right? Where you pay your debt off first. And so I'll kick it over to you, and I'm curious what the Investing Latina has to say as it relates to, should I, as a visionary, our listeners, our audience, should I pay off my debt first, or should I start investing based off of what I have left over now?
You have to understand that the power of the market and the power of investing will always supersede any liability that you have.
Mhm.
If you have I'm gonna just throw some numbers out there. If you have $50,000 of credit card debt, if you have $200,000 of student loan debt, if you owe a property that's $600,000, hypothetical numbers, that debt is debt that you can pay off, and notice that every single one of those debts will have different interest rates attached to them. And it costs different amounts to have those kind of debts. But what you do when you start investing is that you are putting money to work that you don't have to earn. And when you pay off debt, you use that with money that you earn. So what I always tell people, the day that you become debt free, because I definitely get tons of people that are obsessed with it. They're like, oh, I want to be debt free. Like I have all these student loans and I'm putting everything towards my student loans. I ask them, do you want to get to that day where you paid off your student loans and you don't have any money in the bank? Is that how you envision your future? Does that sound like a good position to be in? Think about that. And then you start to think of your debt differently. You start to think of what else can I do? Like, wouldn't you rather pay off your student loan debt at some point, because you can and you will pay off your student loan debt and then have $200,000 in an investment account? Wouldn't you prefer that? So not only are you celebrating debt freedom, but you're also celebrating wealth that you have built even while you were paying off those liabilities. So the power of investing is always going to supersede how much money you make. If you're putting money in the market, and I'll use an example for people that are listening, like if you invest $180,000, and I'm not saying just drop in $180,000 like you have it in the bank or anything like that, but let's use that $180,000 as an example. Over the course of 30 years, you putting in $180,000 into an account, the account with a very modest return of 7% becomes $650,000. So you're like, wait, where the hell did all that money come from? That money came from the stock market. That money came from businesses working every single day to get better, to get faster, to produce things less expensively. And imagine building up a portfolio that has $180,000 and have it become $650,000 versus paying off $180,000 of debt and then having nothing. So that's kind of what you have to think about. And I think that the math is very important. And a lot of times they don't do math, the people that talk about these things. And I'm like, no, that don't make sense. Like, you got to do the math on it. You have to think about, what is my interest rate? And that's how you make decisions when it comes to money, when it comes to business. You think about what is the opportunity cost of doing something or not doing something, and you think about, how much am I really paying to have this money or have this security, right? So money right now, interest rates right now are super low. We're printing money. That's what's happening in the background. That means that we're slowly inflating, and our dollar is becoming less valuable day by day. That's technically and logistically, mechanically what's happening. So what does that mean? It means two things. It means that the dollar is devaluing, and it's more reason why you should invest into other securities. And it also means that you have a lot of opportunity to borrow money at a low fee, at a low price. So in moments like this, these are the moments that you have to think of, how can you leverage other people's money to build something for yourself, to end up making a profit.
I've got a challenge for you against the theory that you just said. Not that there's anything wrong, but I know that there are people that are watching this and that are listening that are going to say, well, what about if you pay this down, pay your debts down, then you've got more that you can invest in the future, right? Or what are the negative effects of the interest that you're incurring on the debt that you have?
Mm-hmm. Yeah. So if you're thinking about the interest of debt that is very expensive, and the most expensive debt that anybody can have is credit card debt, right? It should be illegal how much they charge on interest for credit cards, but it's not. And they like it that way because people are profiting from it. So that's the one that you really have to kind of consider. That's the one that requires the most attention when you are trying to find a balance, because that's the thing. You have to be able to find a balance. You have to be able to say, all right, I got a lot of expenses, I have a lot of bills, I have a lot of debts, but I'm also still going to put in $100 a month into a retirement account or maybe a brokerage account because you want flexibility. Maybe your retirement can look very different for all kinds of people, right? You might not use 401ks. You might not even have access to them. You might not want to retire at 65. Maybe you want to do it at 40. So there's always like flexibility with what you use. But if you should put yourself in the position where you're multitasking. I don't think it makes sense for people to say, oh, let me just do this one thing and focus on this until it's done and then move on to investing. And that's my perspective, right? I think that everybody should be investing no matter what. As soon as you start earning income, you should be investing. And I have a sister that just started her first job last year. She just turned 18 this year. She opened up her IRA and she got started and she wanted to spend her money. She wanted to buy Jordans and whatnot or Supreme. She really did want to do that, but it's our responsibility to share with our friends, with our family. Like, yes, those things are cool and you should treat yourself, but the best way for you to take care of yourself, not just treat yourself, but take care of yourself, is to position yourself where you're building wealth. And what you do when you build wealth is that you give yourself more flexibility to do whatever the hell you want. So I think that with debt, it feels suffocating. Yes, I know that because I've been there. I definitely had a lot of debt before. I've been there. I felt suffocated by it. I wanted to get rid of it. I counted down to those days that I didn't have my credit card debt anymore. But I've invested that whole time. And those years, it was a coincidence that those years were the years that the market had the highest return. So in 2017, just 3 years ago, the market was up almost 23%. And I think back on that and I'm like, damn, imagine if I hadn't invested those $10,000 that I had invested that particular year. So I figured out how to invest $10,000 last year. And I was also figuring out how to reduce my debt. And it came down to budgeting at the end of the day. If you don't budget, it's going to be tough to do anything. So I budgeted and I figured out how to do both. And I was pleasantly surprised and pleasantly, it was just great to see that was one of the most powerful years that we've had in the last 10 years. So I think that we miss out when we don't invest and we miss out if we just focus on reducing liabilities and not building wealth and not increasing our assets.
Well, you just mentioned in regards to family members, when you started out on this trek, did you receive any pushback, right? Because and we're talking about, essentially financial literacy and communities of color. And that, like I said, that's not a place where we're openly welcome to the table, as you spoke about earlier. But, did your family members come back and say, hey, Jully, like, what are you talking about? Like, what type of pushback did you experience when you said, hey, I'm going to advise people financially on how to like make your money work for you long term?
Absolutely. My first memory of pushback was when I told my mom that I opened up that account when I was 19 years old. And she was like, what the hell is that? Why would you do that? Mind you, remember, we're immigrants. She didn't have any of that before. So she's like, why the hell would you do that? Why don't you just save your money? Save your money, save your money. That was always the mentality. That was always what was given to me, right? From a money perspective. That was all I ever heard. And I'm like, save, save, save. That sounds boring. I don't want to save. But when I heard invest and when I heard opportunity and when I heard how can you slowly, but surely build wealth, that piqued my interest. So I absolutely got a lot of pushback. And my mom was like, I don't think you should do that. I think that's weird that they're taking money out of your paycheck. Like, how can you trust them? And that's really what we face. A lot of our communities like that. Like, we don't, especially the Latin community, we don't trust banks. Like, we like money under the mattress. We like cash that feels safe to us. We like buying property that feels safe to us. It's tangible. We don't typically like things that feel so intangible the way that stocks do. So I got a lot of pushback in that respect when I did it for myself personally. I got a lot of pushback from friends when I was not going out because I wanted to pay off debt. And ultimately, when I started investing Latina, I kind of did it silently for a long time. And I did it on my own privately. I didn't really share it with my friends or my family because I had already experienced that sort of pushback in different ways. And I'm like, and I just felt good about something that I was creating. I said, this is something that I enjoy. I'm having fun talking to people about money. I'm having fun helping people build their credit and think of real estate strategies and definitely invest into the stock market because it's the lazy way to get rich. And so I kind of did it quietly and on my own, and now it's become this. And now I can't even keep it quiet anymore because they see me here and they see me there, and they're like, "Oh, I just saw this, and you were on this, and whatnot." I read your article and stuff like that. So it can be tough, and not everyone's going to agree with your vision and what you want to do with your money. But ultimately, the only people that matter is that you understand what you're doing with your money, and the people that you um, value and love at least can respect that. Because I think that's the most important thing. They might not agree with it, but they have to respect that you're making the choices that you're making for the reasons that you have.
Hey, I was one thing I've realized, I've always found out is major corporations, banks, they're always too quick to give you to get you into debt, right? But whenever you think about starting a business and you want a loan to start a business, it's as if you're gonna start running into one closed door after another, right? And so, what advice would you give? Let's say there are people who are looking, starting a business. What type of loan, would you, recommend or that they should be looking into?
Yeah. And it's so true. Like, and it goes back to what we were talking about when it comes to education and the system itself. Like, there's ways, it's kind of crazy that you're able to take out $500,000 to go to school, but you can't get a $50,000 loan to start a small business. Like, why does that have to be so complicated? Why do you have to have so many requirements when you can easily take out $500,000 to go to school? So I think that it's the system that we have to work in. I personally don't have experience in taking out business loans at this point. Maybe I will in the future.
You don't need to take out any loans.
Yeah. So I and maybe I will in the future because I do want to grow the brand and I have a lot of different plans and ideas for it. So maybe I will get to that position where I will want to take out loan. And if I do, I think now is a great time to do it. Now that interest rates are low, it's a great time to do it. You just have to kind of do the research to understand what are the things that they're going to be looking for. They're going to want you to have good personal credit score, a good personal credit background, right? They're going to want that because they're going to use that first before you can open up business accounts, before you can get a business credit card, stuff like that. So I think that it's always a matter of preparation and understanding what if you know what you want to do, if you have an idea of what you're trying to accomplish, but you need the capital to do it, you have to understand where you can go for that capital. What are the places that are going to offer it? And what are the questions that they're going to ask you when you're out there asking for some money? They're going to be like, okay, well, how much have you made so far? Do you have a business plan? Do you have any partners? Do you have a strategy? So there are things that you can prepare for to put yourself in the best position to actually get funding from whether it be a bank or a private lender. And it involves, I think, a lot of creativity, but I would absolutely always encourage people to do it. Every time I meet with people in my workshop, with the investing workshop, they come to the workshop and I have hundreds of people at the workshop. And then I meet with some of them one-on-one. They want some more tailored advice and whatnot. And I always bring up business. I say, okay, let me know what your finances look like. And then I want you to think about three things: the stock market, real estate, and business. What is your plan for each of those things? And a lot of times they're like, I don't have a plan for any of them. I just want to have money. That's all I want. I'm like, okay, that's good that you want to have money, but you have to think about investing in those three buckets. How can you invest into the stock market slowly but surely? Start small and then build your way up. How can you create a plan for acquiring real estate? And how can you create the foundation to position yourself where you can start a business based on all the things that you've learned in life? So that's always what I encourage people to do. What can you do? How can you start a business? What are you passionate about? What's something that's you're gonna be happy to wake up in the morning and work on? Like, I don't sleep very much these days because I'm working on this brand so heavily, but I love it. I'm so happy to work to wake up early and work on this stuff, and I'm happy to stay up late to work on it because it fuels me, and I have so many ideas for it that I think that the best thing that I could do for myself is live a life where I execute those ideas and not look back and be like, damn, I wish I did that, or I should have done this, I should have done that. So that's my position in terms of starting a business, rebuilding, getting your money right. That's my position.
Love it, love it, love it. Let me ask this. Well, first of all, let's for anyone that's tuning in, how can they get a hold of you? Drop your social media handles, email if you want to do that. What's the best ways to get a hold of Jully?
Yes, for sure. I'm on all socials as Investing Latina. I have a YouTube channel that where I talk about those three pillars: how to build credit, how to get started with real estate, and how to invest in the stock market. I make the videos fun and lifestyle, like nothing too like strict or boring. So there are a lot of vlogs up there, but they all have information about investing, taxes. Because for some reason, my dad is an accountant, and his degree is an accountant, but he's what I call a true hustler. And for some reason, I use that inspiration to study economics in school when I was in college. I didn't mention this earlier, but my degree is in fashion. And a lot of people are like, what the hell? When I say that, but my degree is in fashion. And while I was in fashion school, I also took on economics. And ultimately, I really am interested in the global system of economics at a macro level and at a micro level. And I try to insert that in my YouTube videos. I talk about taxes, even though people always want to like roll their eyes when I start talking about taxes. I know you feel me, Akila, because people are like, oh my God, please, you just do all the work. So I think that, you can always reach me on YouTube, on Instagram. I also tweet, and I'm on TikTok because, and Clubhouse now, because Clubhouse is apparently the TikTok of 2021.
I've seen you doing the TikToks.
Yeah, I'm like pointing here and there and doing all kinds of interpretive dances, and also Clubhouse. So Clubhouse is like, where the audio version of everything. It's interesting, but it's definitely a cool place to kind of connect with people. So that's where you can find me.
Good.
So I want to get into like the nuts and bolts of it, right? The pandemic happened. Mm-hmm. From a personal standpoint, what's the first thing you did financially when you realized, okay, we're all going to kind of be boarded up and sheltered in for a little bit?
Oof. So in my situation, I actually lost half of my contracts as soon as the pandemic hit, because I work as a consultant. I do business consulting, and I do it in the fashion industry. So it's all money stuff and business development stuff in the fashion industry that I do. And you can kind of, in some respects, you can kind of say, oh, fashion, it's not important, it's not needed, but it really is a necessity for people. Like, we have to have clothes, we have to develop apparel and shoes. But because I'm a contractor, I'm at the bottom of the list. I'm like the first one to go. So I lost half of my income right off the bat when the pandemic hit. Luckily, I had already positioned myself where I had a full year of savings in my account, like hard cash. As much as I invest, I do not play around when it comes to saving cash, because when stuff like that happens, and we got to be prepared. So luckily I did have that in place, and I just had to pivot. And it was tough for me because my dad got sick. He got COVID right at the beginning. He was one of the first people that got COVID. And I was like, what the hell? So it definitely was tough from a financial perspective. Like my revenue, my income dropped, but it also gave me time to work on my new business. So all of a sudden I was like, well, I ain't got these jobs no more. We don't know what the hell's going on. We're gonna be home for a long time. And you still gotta get creative. I was still making calls. I was still like finding those pockets of opportunities, because ultimately fashion ended up being very up in 2020. And I absolutely think that it had to do with TikTok. I think people were only shopping so that they could look good on TikTok. But it's interesting how all these things kind of work together and connect to each other. But I pivoted all of 2020, and I was like, okay, I'm going to focus on the brand. I launched the merch, I launched stickers, developing multiple streams of income with the brand itself, and I started speaking. So I basically used all of my tools. I used my complete toolkit of things that I had acquired over the years to pivot and navigate the new challenges. And luckily, I I mean, I say luckily, but it was hard and it was a lot of work, but it has paid off. It has worked out, and I've been building a community of people that really are connected and inspired, and I love that. I think it's so cool.
So so here the pandemic happened, right? And
Yeah.
they've been printing money like crazy.
Yeah.
Everybody's talking about where's my stimulus check, I'm getting mine, or right. But from a financial part, from an investing part, looking at it from a different point of view, as far as, okay, hey, I need that money to pay my rent right now. Would you say it has been the driving force, as far as the part as far as printing the money has been a driving force behind the reason why Bitcoin hit 40,000, right? In a few months. I mean, since November of last year, it went from like 8,000 to 40,000.
Right.
So would you say that was part of the driving force? What's your thoughts on Bitcoin? Do you think it's something it's here to stay? And how would you compare that against other stocks that is out in the market? You know?
Yeah. So that's a really interesting question. And the thing about, well, first I'm going to address overall increase in stocks, because when the pandemic happened, no one would have guessed that the market was going to recover the way that it did. In late 2019, I talk about investments, and at the end of 2019, it was like all time high, all time high, all time high. And last year the Dow ended up at $30,000. So we had been going through all these months of all time highs in 2019. So me going into 2020, like at the beginning, I did have this idea that the market is going to drop. The market has to correct, because we can't always be at an all-time high. There has to be some sort of shift. There has to be a pullback. But never could I have guessed that it was going to come because of a pandemic, and that it was going to drop the way that it did, 35% drop. And of course, that's when people panic, because that always happens, and people start taking out their cash out of the market because they think it's going to continue to go down, which is the wrong thing to do, y'all. If the market is going down, please don't panic. Stay calm. Keep your securities where they are, and make changes another time. Now is not the time. When it's low, it's not the time for you to make changes. So definitely didn't expect it to be the pandemic, but that's what the big thing that's increasing our stocks and the stock market overall is technology. And because of our increased demand for technology during the pandemic, I feel like that's exactly what has kept us afloat from a stock market perspective. All the companies that are profiting, all the companies that are doing well are tech companies. And so many years ago, we went through the Industrial Revolution, and all the companies that created steel and were making the railroads and were making trains, those were the companies that were flourishing, because there was so much demand. That was the plan on how we were going to develop a better world. Now we're going through the tech revolution. and the plan is to develop a better world through technology. And so that's what's really keeping the stock market where it's at. So that's one thing, right? That's why we see these increases. The other thing that you mentioned is Bitcoin. So Bitcoin is the anti-government security of all. So the and I don't know if we can say that the reason that Bitcoin has gone up is because of the government printing money, but I think that it's more so the reason Bitcoin is going up is because people also kind of are learning about blockchain technology, which is also tech, right? So we can kind of bubble it, we can kind of classify it all together in this tech revolution, right? And they're also losing kind of the trust in government. And I think there always are those people that don't trust the government at all. There's always going to be that, but I think that we probably are seeing a spike of that, especially with the volatility of our current today's yeah, the way that it was, the way that our presidency in the US has been, and the way that our politics have been the last couple of months really only fueled that for people. They're like, you know what? F the government. This is some bull. Like, things are never gonna get better. We gotta move. And so what's important to understand.
We don't answer anybody.
Say that again?
You can say what you want to say. We don't answer anybody.
Okay. And so the government, so essentially it's anti-government, anti-regulation, and that the people that are investing into blockchain technology like Bitcoin are the people that really think that that's going to be the next most important thing. And that's why it continues to kind of go up. Is it going to go back down? I saw it today and it was like a little bit higher, like it dropped significantly, but then it was a little higher again today. The fact is that we're always going to see that fluctuation. I always get asked the question, do you invest in Bitcoin? And I personally do. Yes, I do. It's because it's another type of security. It's something that I sprinkle into my portfolio. I still do believe in our capitalist world and in our government because there is the law and order that we have in place right now. But I do have a little bit of Bitcoin. So yeah, I don't know. There's a lot of things that come into play. And I think that you have to kind of assess on your own what you feel good doing and where you feel okay taking risk, and always finding some balance.
Well, it's all about diversification, right? Like you never want to have all of your eggs in one basket. And so if you were to say it's 100 eggs, right? Maybe you have, 80 eggs in the market, whether it's ETF, stocks, bonds, blah, 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 blah. And maybe you put in 5 to 10 eggs in, crypto. I want to ask the same line of question as it relates to the Forex industry. What are your thoughts, feelings, perspective on Forex?
So with Forex, because we get so much Instagram spam about Forex, people don't understand that it is actually like a real thing. They think that it's like a joke. And unfortunately, some people do fall for it. Even people within my community were like, oh, I sent somebody $1,000 to invest in Forex. And I'm like, do you know what Forex is? And they're like, no, but they said that they would give me my money, that I would earn $20,000. I'm like, why would you do that? So, but the issue with the online scammers is that people also start to lose sight that it's actually another type of security. It is a way to invest. It is something that you can do, but you have to be sure. The most important thing with any security is that you're going to the place where it is that's credible, right? It's not, you don't send money to a random person to help you invest into Forex. You go into the places that actually are accredited for that. And that's the only thing that I would say. It's a very high risk security. It really is. And there's fluctuation. And I think it's something that requires almost more skill than anything else. And it's something that people, after you have your everything else in place and settled, and you want to continue to explore possibilities of making more returns, then you can go to those places, right? Then you can go to foreign exchange. But there's a lot of money that you can make just straight up the easy way with stocks and with securities and funds here. So I think that sometimes people that want to do it, they kind of just want the challenge of it. That's how I kind of see it. And it's fine to do. Just make sure that you go to an accredited institution and that you're going through and that you're not getting ripped off by somebody random on the internet.
Man, this has been great. So first of all, not to sidetrack it, but if you're ever in Dallas, like look us up because we would love to hang out with you. This has been
Yeah.
very, very
I haven't been to Dallas. Now I have reason to go.
absolutely. I mean, this the whole reason behind this series is to make sure people were educated when it came to finances, and you have done that and multiple times over. This has been great.
Thank you.
As we look towards the future, right? New government in place, and at some point, we'll get a handle on this whole COVID thing, right? What would be one small nugget of financial advice that you would give to our visionaries out there, or any of your followers who are watching or listening to this episode?
For sure. I think the most important thing to kind of recognize right now in the moment that we're in 2021 is that money is cheap and it's extremely easy to get into the stock market. You should not have a lot of challenges getting started. Don't overcomplicate it. Simplify things and understand that because money is cheap, that means that you can leverage other people's money to invest in things like that can help you build wealth, like real estate or your own business, right? So that's my tip. Make sure that you are taking advantage of the fact that interest rates are low, and take advantage of the fact that technology has enabled us to have the most access that there has ever been to the stock market. Before, you needed X amount of dollars to get in. You needed X amount of dollars to participate. Now there's none of that. So make sure that you're doing what white people and people that have had wealth for many, many generations have done. Get into it. Start investing, keep investing, and get this money.
Money.
Get there, right? Get behind the dollar, right?
Right. Yes.
So I would say, give what are some great resources that people can go and actually do some digging for themselves, that are looking into invest, that are looking into the real estate? Because I know you mentioned there's 3 pillars, that you mentioned earlier, which is stocks, real estate, and also businesses, right? So in your own word, what would you recommend they do some research to help themselves as
Yeah,
well?
I love the encyclopedia of investing, and that's Investopedia. You can find just if you're getting started, it's really important to kind of just start picking up words here and there, things that because it can be a lot, and it all takes a little bit of time to learn. But if you sign up for Investopedia's word of the day, that's how I started probably 10 years ago at this point. I didn't know. I had already been investing. I didn't know what the hell I was doing, but that was more reason for me to sign up. And I started just reading that word a day. And that word a day became me reading a paragraph a day. And then it led to a full article a day. And I started grasping it more and more. So if you want to get into investing overall, I think that's a great resource. And it's kind of focused on the stock market, but there's, it has terms for everything as well, business and real estate. For real estate specifically, I reference Bigger Pockets. I think that they've done a great job at really putting together resources for the regular person that would like to get started with rentals and flipping houses, all those types of strategies that come into play when you're thinking about real estate. And then for business overall, I really like to keep tabs on Yahoo Finance, because they'll tell you what's the movement of this company and that company, and they're focused on publicly traded companies because they're the resource for the stock market. So I would classify those 3 as great resources.
Absolutely. Well, Jully, it's been, like Mo said, absolutely amazing. Certainly privileged and honored to have you here in the lab. Another episode of Behind the Dollar sponsored by Aquila Financial and Tax Services. It's been absolutely amazing. One more time for all of our visionaries that are still tuning in, if they want to, by the way, I wanted to ask you this question. Are you having any more workshops coming up in the last part of February, early March?
Yes. So I teach the investing workshop, and there are a couple of different classes coming up. I teach index funds and ETFs, which is like a foundation, how to basically start baking the cake for your portfolio. And then I'm also having a dividend investing workshop, and then how to analyze individual stocks. So those are the three workshops that are going to be out in the first half of the year. The second half of the year, I'm exploring creating workshops and bringing in people that are going to focus on real estate. But I definitely have a lot of resources for those of you that want to get started with the stock market. And you can check them all out on Investopedia. I'm still thinking about Investopedia. On Investing Latina, investinglatina.com/the investing workshop.
Love it. Love it. So again, big ups to you, Jully. Thank you so much for jumping into the lab and chopping it up with us. Visionaries, again, wonderful episode of Behind the Dollar. Hope you guys got a lot of education out of this content. We'll see you guys next week. Again, special shout out to James. Thanks so much for joining us. But we'll see you guys in a little bit on another episode of Behind the Dollar.